What's the very latest on the fate of this bill, which it sounds like the companies might get an exemption from, and hence the stock rallies today?
Right. So Uber and Lyft in particular, a lot of the other gig economy companies, though, have been working to carve out exemptions. This bill has been winding its way through California legislature for some time, and it just passed the last step, which is really a formality, being approved by the Assembly. Now it goes to Governor Gavin Newsom's desk. Now, the reason that you're seeing these companies pop today, even though this could have major multi-million-dollar implications for the business, is because there are still some questions over the implementation of it and whether Governor Newsom will actually carve out those exemptions for Uber and Lyft. He suggested in an interview today that he might be willing to still.
So are they just looking for a headline, Dierdre? If they're not cracking down on Uber and Lyft, then what is the point of this law?
The point of this law is to really reshape the gig economy. As you said in the opening, should these drivers be treated as contract freelancers, or employees? And really, it is split among the ride-sharing community. There are some drivers who are pursuing other endeavors, other careers, education. They may not want to be classified as employees, but there are other drivers that can be very vocal who say that they want all the benefits of a full-time worker. What Uber and Lyft are doing are trying to carve out some of these benefits, minimum wage, on their own so that they're not part of this sweeping bill.
Okay, so Tom, maybe you tell me, what would be the biggest win from a business model point of view if it sounds like this thing is going to pass, that they carve out minimum? I've heard that all told it would raise their costs by 35%. What numbers are you putting around it?
Yeah, I think that's generally in the ballpark. We think anywhere from sort of 25% to 35%. Look, I think, as Dierdre mentioned, the market largely anticipated that this bill was going to pass, and we ultimately, I think, expect that Newsom is certainly going to sign it. What the market's still trying to handicap is whether or not the two sides are able to hash out some sort of middle ground. I don't think anyone would argue that.
What would the middle ground look like, by the way?
Well, it'll probably be a somewhat watered down version of the level of benefits that AB 5 suggests, but it will certainly include a minimum hourly wage or an effective wage. The parties have sort of thrown out this $21 per hour. It will also include, or at least the gig economy companies are trying to put forward this idea of sort of portable benefits. So if you're a driver and you drive from multiple platforms, but you drive collectively over 24 hours a week, let's say, that you'll get a certain amount of disability insurance, a certain amount of sick leave,
so they can
family
kind of
leave.
Work together on all of that.
Yeah, sort of pool the costs a little bit.
So what does it mean for the prices of Uber and Lyft share prices? And is it contingent on whether this spreads beyond California?
Well, I think that's a major question, and it's still sort of an unknown. I've had some people try to argue that, or convince me that there are particulars in the California Constitution that kind of created a loophole by which the gig economies could kind of be targeted that might be harder to replicate in other states. That said, I think broadly a lot of states are going to look to California as sort of a thought leader and as sort of the model for how to deal with this very new kind of gig economy model that's emerged.
So Lyft's at 47, Uber's at 34 right now. What are their price targets? What should those targets look like? How much does this affect their long-term profitability?
Well, we still don't really know enough about exactly how this is going to get implemented. I think if they manage to hash out a middle ground and it looks like we sort of think it's going to look, I don't think that there'll be massive impact to kind of the target operating model for these companies. There will definitely be moving pieces. So costs will increase, prices will increase. I think both platforms are going to have to get sort of surgical in the way that they optimize around pricing, rides where they can get away with raising prices more.
Where would that be?
Well, it's certain times of day, it's certain markets, it's certain users. So, Midtown Manhattan trip to the airport
get more expensive.
Get more expensive, and that rider will probably accept that increase, whereas other routes not so much.